Hello and welcome to this Cornerstone Finance Group podcast brought to you by Business News Wales and sponsored by CHL Mortgages. I'm Gemma Casey, editor of Business News Wales, and in this episode we're going to be looking at the buy-to-let landscape. Changing tax rules, interest rate pressures and evolving regulation have shifted the landscape significantly in recent years. So how can mortgage advisors support new and experienced landlords in navigating this market? Well, with me to discuss this are Jonathan Needham, Business Development Director at Needham Financial, which is part of the Cornerstone Network, Roger Morris, Group Distribution Director at Chetwood Bank, and Mike Powell, Mortgage Broker at Mike Powell Mortgages. Hi all, thanks for joining me. So, first of all, Roger, I'd like to come to you, and before we get into the discussion, tell us a little bit about Chetwood Bank.
The Chetwood Bank is the newest bank to launch in Wales. It's based in Wrexham, and it has got two specific buy-to-let lenders in its stable. First is CHL Mortgages for Intermediaries, which is a specialist, more complex buy-to-let lender, and Needham Mortgages, which is the newest buy-to-let lender to launch in the UK mortgage market. That's really aiming at your first-time landlords and your landlords that are on that journey but haven't really yet got to the complex stage. So one's your standard buy-to-let lender and one's your complex buy-to-let lender. So that's Chetwood's bank's whole focus now, is about developing that comprehensive solution for mortgage advisors and landlords alike to have that full offering within two buy-to-let lenders that give you that sort of 365 degrees of cover when looking at all things buy-to-let, Gemma.
And tell us then a little bit about what the current buy-to-let market looks like and what is influencing lender appetite and product availability.
The buy-to-let market is going through a transitional stage at the moment. There's a lot of legislation coming in now, which is causing some concern to landlords. But those landlords, and the vast majority of landlords, are very professional and very focused. But we are seeing a bit of a transition between somebody that just has one buy-to-let and to those landlords that aspire to grow portfolios. But I've never seen in my 35 years as both a lender and a landlord a better time to be in the buy-to-let market. We've seen rents drive up dramatically in the last 3 years. My personal rents have gone up 42%, and the cost of borrowing is steadily reducing. And the demand for buy-to-let properties, when a property comes available in the UK, it's an average of 12 families per property. But my personal experience is significantly higher demand for families when properties become available. And lenders are really wanting to tap into this opportunity that is out there, is the fact that the buy-to-let market, including product transfers, is over £60 billion. And it's a very sizable part of the marketplace and a much needed part. So what lenders are trying to do at the moment is to come up with the right solutions, the right products, and the right criteria to help support mortgage advisors who are engaging with landlords who are either looking to purchase, remortgage, or do product transfers.
Thank you, Roger. Mike, if I can turn to you from Mike Powell Mortgages, firstly, tell us a little bit about your business.
So we set up the firm about 15 years ago, and they've now grown to a team of 9, 7 mortgage brokers and 2 admin ladies. And the buy-to-let arm of it has grown and grown, and it's going really well.
And Roger has spelled out there a really busy landscape in buy-to-let. What are landlords telling you at the moment?
So similar to Roger, I'm a landlord myself, and we obviously have lots of clients who are landlords. I'll just echo what Roger said. So the people who have got one, who've been left a property maybe from an inheritance, they seem to be trying to get out of the market. They're seeing that they can get rates at the moment of around 4 or 5% if they just put it away in the bank. But the professional landlords, the landlords who've been through some of the highs and lows of the last 20, 25 years, they're staying in it, and they're seeing the opportunities for the people who are the dinner party landlords who are leaving. They're seeing the opportunity to potentially take over those properties and grow their portfolio. The rents have gone up quite a lot in all parts of the UK, pretty much. I think there's still definite growth areas in the buy-to-let landscape.
And what are you seeing in terms of things that are affecting landlord decisions at the moment? For example, around tenant expectations. We also hear a lot about energy efficiency requirements and also affordability concerns. How are they driving the conversations you're having with buy-to-let landlords?
So the EPC is probably the big thing. We're a little bit ahead of the curve in Wales with Rent Smart Wales have been trying to incentivise or trying to get landlords to improve their properties anyhow. There's quite a few grants available, so to get your landlord to get your properties from, especially from an E to a C if you can. I've actually had a new boiler put into one of my properties. I know several of my portfolio landlord clients who've been looking into that as well. That's probably the big concern. Now, 2025 is when it's supposed to be getting to C, I believe. Whether that happens or not, I think there's another story. I think there's so many houses in the UK which are going to struggle to get to a C. Some of the retrofits that have happened previously as well, with things like spray foam insulation in the roofs, which have caused a few issues for landlords. There's still a bit of hesitancy from the landlords to put these new new EPC improving policies together. But other than that, yeah, there's still massive demand for buy to let.
Thank you, Mike. Jonathan, to come to you, first of all, tell us a little bit about Needham Financial.
Needham Financial exists as a division within the Cornerstone network, I guess. And you might refer to it as a community or an environment. And our main objective is to provide a platform for brokers, not just to have access to lenders and providers, but we aim to provide added value in addition. We exist for the benefit of the brokers that are part of our journey, not just Needham Financial, but the wider Cornerstone network.
We're just coming on that. So that is a big thing for us as brokers is if a client comes to us, we need to have solutions. So we need to be able to go to, your likes of Moda, which is, as Roger said, is the newest lender in the UK, I believe, for buy to let. So to have different avenues rather than just your 1, 2, 3, 4, 5 mainstream lenders where people will go to, and yes, if it's a chase for the rate, you're probably going to go there. But for the landlords who've got bit of a quirky properties or a bit of a quirky history themselves, to be able to have another avenue to go down is huge for us as brokers.
So lots of product choice is really important. Jonathan, to pick up on that point, and something that we've talked about in previous episodes of the Cornerstone podcast is this fixed rate expiry surge when it comes to mortgages this year. Looking at that in terms of buy to let borrowers and also those that might be on variable rate products in a landscape where we're seeing interest rates falling, how can mortgage advisors best support their clients in that kind of scenario?
It's a really good question, Gemma. A huge area, really, where brokers can add real value. As you say, many landlords are coming to the end of sub 2% fixed deals and facing the shock of current market rates. For me, this is all about forward planning, getting on the front foot, reviewing client portfolios well before expiry dates, stress testing affordability, and looking at product transfers or remortgages that fit their wider goals. For variable rate clients, there's an opportunity in timing. We help them weigh up whether to lock in a new deal or ride the rate drop. I think it's fair to say that it's not is a one size fits all approach. Advice needs to be tailored, and this is a real opportunity for what I call proper brokering.
Proper brokering, I love that. Roger, Jonathan has spelled out there that there's an opportunity. In your view, what are the opportunities for mortgage advisors to add value in this space?
What the key opportunity is about upskilling and investing in their own education. So mortgage advisors who are setting out on their journey to understand buy to let is possibly maybe one of the most complicated areas of the marketplace now compared to how it was 20, 25 years ago. And mortgage advisors like Mike Powell don't come around. You can't just take them off the shelf. If you think of the years of personal development that Mike's undergone, He's a landlord himself, which, in my opinion, if I was selecting an advisor, having somebody that is not just an expert in buy-to-let, but can resonate with a landlord, and Mike has that. I'm not saying that for a good advisor, you must have buy-to-lets, but I think it helps you understand their world and their option. As a landlord myself, one of the big things that CHL Mortgages and our sister company Morgan Mortgages has offered is free valuations, because landlords can end up paying out quite large sums of money to do a remortgage or a purchase. So it's about trying to stay in tune with the landlord marketplace and being able to say to the advisor is really get to know the specialist lenders, understand all those quirks and differences, and invest in your own personal education.
I think from the broker landlord relationship as well is when they are coming, just to go back to the previous question a little bit, when they are coming to the end of these terms, it's finding out what they want to do. Do they want to grow their portfolio? Do they want to downsize? If they do want to downsize, why do they want to downsize? What opportunities are there in, in holiday let or multi-unit freehold blocks, etc. And do they then want to take out a further advance? Because if they do it at that time, it's often a lot easier to do the further advance while you're doing your rate switch, rather than they come back to you in a month's time and say, oh, actually, I want an extra £40,000. So I've just seen that property that I wanted to like. So it's keeping in touch with the landlord, keeping a hold of their portfolio sheet, and just trying to add that value to them, not just at the end of the rate switch, but during the 2 or 5 year fixed as well.
So, Mike, the message there then is really that the relationship and the advice needs to be based on long-term goals and not just looking at those short-term returns.
Definitely. Yeah. So obviously we don't give any tax advice, but what is the plan for that portfolio? Is it a plan to get to 2, 5, 10, 20, 100 properties? What do they want to do when they get to the end? Because, none of us live forever and those properties will still be there. So how do they want to pass them down to family members, or do they want to sell when they get to a certain age, sell a couple of them when they get to a certain age? Which are the best ones for them to keep with the yields, etc., or potential growth in that area? Do they want to diversify? Like all mine are in South Wales. Should I be looking elsewhere in the country as well? So just constantly trying to keep in touch, and it is hard, especially if you do get busy, but trying to make sure that you're not just there at the end of the 2 year or 5 year. You're trying to add value as you go along as well. Discussing things like the grants, because there are still loads of grants out there. People think they can't have them because they're a landlord, and it's not true. If you've got a tenant who's on some sort of benefits as well, then there's options there to try and get ahead of this EPC change, because it's coming in some sort of guise. I don't think it's going to be there in 2025. I may be proved wrong, but something will be happening with regards to that.
So, Mike, it's really about establishing yourself as a mortgage advisor in that role, really, of trusted advisor for your clients, isn't it?
Yeah, you don't want them to, if I was if I went to a mortgage broker, as I used to before I become a broker myself, I'd want him to not just say, right, well, this is the best rate for you. So there you go and have that, off you go. It's about why we're going to that lender. Does that lender have a product transfer at the end of the 2 year or 5 year? Or then you're going to have to pay, move away from that lender? Or is it a case of you've had to go to a lender with a slightly higher rate because of circumstances, maybe income, credit, or maybe the property type? But then what is the goal at the end of 2, 5, 10 years? It's not just a case of, similar to a residential as well. What is that property journey for that client?
And Jonathan, thinking about that scenario where the mortgage advisor really is the trusted advisor for their clients, what about protection and insurance products? How important is it that the mortgage advisor is able to support with those?
Again, another really good question, Gemma. I think it's an area that often gets overlooked, but it's essential. Landlords face a range of risks, from tenant default to property damage, and a good protection strategy is just as important as the mortgage. I think brokers need to encourage landlords to think about things like income protection, landlord insurance, and even life cover if their portfolio supports dependents or it's leveraged. Um, Framing it as part of their financial resilience plan, not just another policy, it does make all the difference, because I'm a big believer that horrible things happen to normal people all the time. Normal people just like us.
Mm.
I think from a broker's point of view, if we can speak to agents, estate agents, and just explain to them that, income protection for a tenant is, so if you've got, as a landlord, if you've got someone who's got an income protection policy and someone who hasn't got an income protection policy, then as a landlord, you're probably going to edge towards the former rather than the latter.
Is that something that you widely see, Mike, or is that something you would like to see become more BAU in these conversations?
I'd like to see it more, but as Roger alluded to earlier on, the fact that if you put a house up for rent now in the majority of the country, I think that, well, he said the stat was 12. I put a property up 18 months ago, and I can guarantee you there's a lot more than 12 people who was knocking and asking me to come and view that property. So as landlords, you have got a pick of the bunch at the moment. So yeah, but if you can educate estate agents who to talk, at least have the discussion with the tenant about income protection policies, I think that's a big growth area.
Roger, on that point then, you mentioned earlier the importance of staying ahead of the trend in terms of skills and making sure that as mortgage advisors, they are upskilled. How important is it for everybody involved in this buy-to-let landscape to be staying ahead of skills?
The world is changing, and it's changing fast. You've got the Renters' Rights Bill, which is going through Parliament, and the Renters' Rights Bill will then change significantly the buy-to-let landscape. And this is why I would definitely agree with Mike and Jonathan's point about having some form of either tenant insurance for them losing their job, or certainly the landlord taking out landlord insurance in case the tenant loses their job, because the eviction process is going to get more complicated. We've seen in Wales, which is now universal throughout Wales, is the registration and the adoption and the focus on the quality of landlords and rental properties. That hasn't really taken the same effect in England, but under the Renters' Rights Bill, that will then become equal, and we'll see a much more professionalism throughout the area. And what we'll also see is an increase in estimated, with the figures I'd got recently, was 5 million more people will enter the UK over the next 5 years. And there's currently 1.2 million people on the housing waiting list. And I agree with Mike. At my own stat in Birmingham, the last buy-to-let I put on 6 weeks ago had 39 families apply. So it's about saying to the landlord, what is your confidence level? So the first time the mortgage advisor speaks to a landlord, I think it's your level of confidence at being able to really understand the solutions and not just being rate driven, that real engagement about helping them go on that journey, and that specific tax advice early on, because a portfolio can grow very quickly, and you're best to have the right structure now that you can build on safely.
So do it correctly from the word go then, Roger. Don't sort of wing this as you go along.
Get the right tax advice, yeah.
Yeah.
And these days, it's statistically, it's going to be in a limited company, and a good tax advisor would, if you're going to have, if your first property you've ever bought, you would have to buy it in a limited company because it would affect your residential from a stamp duty point of view. But with succession and IHT planning, if I'm 26-year-old, I might have that portfolio for 70 years of my life. What would it be worth in 70 years' time? And how will that IHT planning and mitigation? So it's not just the lender, it's not just the advisor, it's getting good tax advice as well from a person who is qualified to give that advice.
And that's something we're going to discuss in far more detail in the next episode. So for anybody who is keen to learn more, make sure that you tune into episode 6. Now, I'm conscious of time, so one final question for each of you, and that is, we've talked there about what is a complex landscape, but one with plenty of opportunity as well. So what would your one piece of advice be to mortgage and protection advisors on supporting their clients to navigate the buy-to-let landscape at the moment? Mike, I'll start with you if I can.
I think it's just not going back to them at the end of their fixed rate. It's being constantly in contact with them, sending them little snippets. So we get loads of good advice from lenders on email. So maybe send them a little snippet about what's happening in the market, about the EPC changes, about the renters reform bill, because there'll be a lot of landlords out there who don't even know some of this stuff is coming. So it's just trying to educate them slightly, but also just keeping constantly in contact with them.
Thank you, Mike. Jonathan, same question to you.
Yeah, everything that Mike's just said, but I think there's a step before that. And that's all about the broker keeping their own pencil incredibly sharp, because it is fast moving. Things like the reform bill, etc. So you've really got to make sure that your knowledge is kept up to date.
Thank you. And Roger, the last word to you.
Mike said it all, and with Jonathan, it's about education being relevant and staying in front of the customer. So every month I will be sending some form of a summary of what's gone in the renters' rights bill, what's happening with EPC consultation. When that becomes law, what's the information? Keeping them updated about the volatility in interest rates. We're seeing interest rates dropping, but the swap rates, which is where lenders get the money from, are actually going up. So why aren't rates coming down when they're going up? And then it's about understanding all the options and how to increase yield from a buy-to-let property, and showing and demonstrating your value as a mortgage advisor is so valuable at the moment. And often mortgage advisors don't really value themselves in the way they should. So communicate effectively with your customers and keep them updated on everything that's going on in the world of buy-to-let.
That is a really positive message to leave it on. Thank you to my guests, to Mike, to Jonathan, and to Roger. And thank you for listening to this Cornerstone Finance podcast.